Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial filing from Discover Financial Services, and let me tell you, it's a bit like hearing wedding bells, but instead of people, it's companies merging. We're looking at a Form 8K, which is basically a corporate breaking news report. In this case, the big news is that Discover Financial Services is getting ready to join forces with Capital One Financial Corporation. This report tells us that they've cleared a major hurdle on their way to becoming one company. This report is dated April 18, 2025, which means this information is fresh off the press. It's important because it signals a big change in the financial landscape, especially for credit cards and consumer finance. Discover Financial Services, based in Riverwoods, Illinois, is the company we're focusing on. You probably know them for their credit cards and banking services. They're a pretty big player. This part of the filing is just standard legal stuff about whether they're also using this form for other regulatory requirements. Nothing too exciting. This section lists the type of stock Discover has and where it's traded. They're common stock, that's the main kind most people can buy, trades on the New York Stock Exchange under the ticker symbol DFS. Here's the heart of the matter. Discover and Capital One have announced that they've received the go-ahead from regulators. The Federal Reserve and the Office of the Comptroller of the Currency gave them the thumbs up for the merger. That means the government agencies in charge of overseeing banks are okay with this deal. They're calling the deal a merger, and it all stems from an agreement made back in February of 2024. Now that they have the necessary approvals, they expect the deal to close around May 18, 2025. That's the target date for when Discover and Capital One will officially become one company, unless something unexpected pops up. This section is a legal disclaimer. It's saying that anything in this report that talks about the future might not actually happen. There are risks and uncertainties, meaning things could change. They point out that factors like failing to meet conditions for the merger or unexpected events could stop the deal. They also recommend checking out their annual and quarterly reports for more information on these risks. This section points to an exhibit, which is a joint press release from both companies about the merger approval. We will not focus on that. This is the formal signing off of the report. Effie Vinikos, Assistant Secretary, signed on behalf of Discover Financial Services. Sitting now, what does this all mean? This merger is a big deal for a few reasons. First, it combines two major players in the credit card market that could mean changes in interest rates, rewards programs, and other features of credit cards. Second, it creates a larger financial institution, which could have implications for competition and innovation in the industry. From Discover's perspective, this merger offers both opportunities and risks. On the one hand, it could provide access to more resources, customers, and technology. On the other hand, it could lead to job losses, cultural clashes, and integration challenges. Overall, the merger of Discover and Capital One is a significant event that will likely have ripple effects throughout the financial industry. It's something to keep an eye on, especially if you're a customer of either company. This deal will allow them to create a new juggernaut of financial power. Thanks for watching. If you found this corporate decoding helpful, please like, comment, and subscribe for more deep dives into the world of business and finance.